Hello everyone, welcome to the Grow Your Future podcast. I am your host, Azmi, and I'm joined from the backyard to the podcast, Sam Eljaban.
What a journey, what a journey. We've come a long way.
I know. You were just saying from the backyard for our listeners, what does that mean?
The backyard, we grew up together. Family friends from a long time ago, still friends, family friends. And we used to, I think we actually sparred. Did we spar together?
Oh, we used to do everything in that backyard. Barbecues, we used to box, we used to lift weights, we used to play pool.
I remember you, I think, you came and you nearly broke our deck because of the weight on the bench press, man. Because our deck was shonky, man. It was like too wet.
It was your dad's way of getting me to fund a new deck. You know what I mean? Great memories. Oh,
I love it, man.
About 25 years ago now.
Wow. So you would have been about 15,
Yeah.
So, fuck, 25 years.
Yeah.
Man,
we've come a long way.
That's a long time.
We've come a long way, and look at us now. Love it, man.
Love it.
You're the one outbenching me now with those guns. Look at you.
This is just, this is pension. I do pensioner walks around the park, man. And that's it, some push-ups.
How you been, Sam?
Good, man, good. Getting into the swing of things.
What's new in the property world for you?
Property world is just
still buying,
accumulating.
Yeah. You're still in your accumulation phase, aren't you?
I think I've got a long way to go. I have lofty plans, lofty goals. Sorry, and
but you know what's funny? Like accumulation stage, it feels like it takes forever. But then once you hit that sort of point where you've bought enough and you need to consolidate and you've sort of got to be a little bit more strategic than just being aggressive with buying properties. It sort of just takes a life of its own and it just moves so quick and then it just opens up so many more options. But I must admit the accumulation phase, like I'm sort of done with the accumulation phase now, but it is the most exciting.
Yeah.
You know, it takes the most amount of work, but it is the most exciting part of the process.
Because you're sort of starting. So if it's your first one, you're going from 0 to 100%.
Yeah.
The next one is like you're doubling 1 to 2. But if you get to like 10 and then you go to 11, it's less exciting. So over time, it's going to happen.
It actually becomes a pain in the ass because you got to sign more loan contracts. You got to deal with more problems in terms of maintenance issues, all of that sort of thing. But it comes with the territory. But you know, the majority of our listeners are in the accumulation phase, or they might not have even invested in one property yet. They're looking to get a bit more education on it. But the accumulation phase is the most fun and I have the most memorable experiences there. But it does give you a lot of options later on in life.
You need the equity. I think I'm at that stage now where I'll be able to start pulling out a decent amount and then it's less of a burden on my pocket, which is exciting. So up until a certain point, you have to fund a lot of stuff, which is the pain. And if you don't want to get outside of that realm, you're not going to get outside unless you pay. So we're sort of at that point now. So it's I can see a lot more exciting things to come now. You know.
And just tell our listeners, Sam, about the process, not so much about the detail, but the person you've become and what you've learnt, right?
You learn to deal with. We touch on it from time to time. You get given harder problems to solve. It's sort of just you wear a lot more scars, so you go through a lot more pain. You develop your character. You develop your emotional intelligence because you have to deal with a lot of emotional stuff. Money is emotional, and growing your wealth and all that kind of stuff is emotional because you have to change the person you are. The people who are around you change because they might not like you anymore. They don't want to deal with you anymore. You just lose contact. So it's sort of like...
Because they're not on the same path as you, right?
You can't... And what I found over time, you can't talk to them about the same things because you're on a different path. Like what I think about nearly daily is different to what they do. And they have different concerns and goals which don't... I still love them, but we're going on different paths. And you sort of... some relationships change over time, which affects your emotion because you're sort of like... I'm a very nostalgic guy. I like we were talking about the backyard. I like having constant people that I trust and love in my life throughout my life. I don't want them to change, but sometimes these things change. So you sort of develop a different network of people you hang out with, sort of your crowd, and you just move with those people. So,
and that network sort of grows, right? Like you do let people go and respectfully, but we always say when you build that portfolio, a lot of people look at the numbers and they go, okay, I'm going to end up with $10 million worth of property, for example. I'm going to have X amount of equity. I'm going to have all these options to do bigger projects or maybe sell down some stuff, pay some debt off, whatever the exit strategy is. But it really is the person that you become throughout that whole process. And like I got a message of a client this morning who reached out to me 4.5 years ago. This client now has, I think, 5 or 6 properties now.
Good.
And he actually said, he goes, man, I'm so grateful that I got in touch with you 4.5 years ago, and you know, you've helped me along this journey because I've just changed as a person. And what I love about property investing is it's long term, and you've got to learn things like delayed gratification. You've got to learn things about how to deal with different people and how to navigate your way through everything. And then it transfers over into maybe your household, your marriage,
everywhere,
relationships,
your life.
maybe the business that you're running. You don't look at it as so short term. You look at it more as an asset that you're building. And I'm not saying it's the answer to all of your problems, but it is really it's one of the best self-discovery programs that you can do, I think.
We just recently, you were kind enough to gift the Money Club a nice present, the chess board and pieces from Italy. Very nice one. I like to think property investment, any type of journey where you have to go through problems and fix problems and grow. It's sort of like a chess game. It's very strategic. Like chess isn't a quick game. It's usually, there's a lot of moves you have to make to win, which is sort of like property investing.
And you've got to think.
You have to think a few moves ahead as well, so you don't get sort of capped or stuck. But also, there are moves in chess where you have to sacrifice to get an advantage. So you might sacrifice a pawn to get someone's queen.
Yeah, there's a bit of pain there. Yeah.
There's pain, so if you play the game like that, you usually win quicker or better if you can sacrifice. If you're too scared and you don't sacrifice or try and get an advantage on the other person, you're probably going to lose. So I think that the chess game, I like chess as well. Chess comes into play. It's sort of like you're living your life like in a chess game. You make
and you avoided this pain for a while, Sam. You know what I mean?
Yeah.
Like there was probably throughout your whole 20s where you were sort of avoiding risk and avoiding pain, and I guess that came with the territory of being an accountant. You know, you're very
risk averse.
You
like money and you don't like spending money.
Yeah,
you're always cost conscious.
You're all about saving and being frugal, and just really trying to get by and without, I guess, sacrificing. And the thing is, it can only get you so far, right? And then when you started to go on the offense and started sacrificing and understanding, hey, pain's not really a bad thing. It's actually essential in growth. And we're talking about business, right? And creating wealth for yourself. You actually then become so accustomed to it that you're just used to it. And you move forward and you sort of go, okay, well, I understand it's going to hurt here, but it's going to benefit me in, say, 2 or 3 years' time. And you've seen that, right? And the results are shown. And this is the problem with people that haven't invested in property before. They don't get to see it work. And this is where, sometimes clients will sign on to buy their first investment, and then they'll get through the contract phase, and then they'll get through the finance phase, and then all of a sudden they feel like, hey, this is not for me, I'm just going to pull out. And it's so disappointing for us, not because we're desperate and trying to get the deal, but we're sort of desperate for them to get the feeling of what it's like to see what that first property can do for them over the next 12, 18, 24 months. Because once they get that feeling, they become addicted to it and they go, okay, how do I do it again? And when you don't go through that first one, it's really hard to really teach these people what it's going to do for them. Sort of the same as I was talking to my wife about it, about having kids, right? Like before we had kids, we were like, well, it would be cool to have kids, but we don't know if we're ready and all of that sort of thing. And everyone's saying, oh, it's going to change your life. You're going to love it. And it's just the best thing in the world. And we're like, yeah, whatever. And, we had our first born and we're like, oh my God, we didn't actually know how good it was, right? We understand it's hard, but like, it's also very, very fun and it's very rewarding and very fulfilling. So, you don't know until you've done it. And that's why our jobs is to push people into the market, get that first one done, get the result, and then it's easy. Like they just go, okay, I'm used to the process. I understand the benefits. It far outweighs the pain. And I just want to keep moving on. And that's where you change people's lives.
Yeah. I think like everything, the first one's always hard. Driving the car's hard. Everything's hard when you do it the first time. And it's always those first clients we have to spend most time with. But once they have their first one, how often do they just call you with a lot of confidence, just asking what to do next? It's just like
what's next?
It's a snowball.
I've actually got to tell them to stop.
Yeah, it's a snowball.
Relax,
make some more money, get a promotion, so you get more loans. So that first one, once you crack it and you understand, like everything, you have to go through it to understand how it works, get comfortable, and then it's second nature. You just keep going.
Yeah. So we want to get as many people into the market as possible in terms of investments anyway. So today we wanted to welcome everyone, 2024. It's our first Grow Your Future podcast for the year. And what we wanted to do is talk about the outlook for the year. And it's looking very positive. Last year was, oh my God, was a tough year, right? We had how many interest rate rises, how many months in a row. The market did dip slightly. But it then started to grow, surprisingly, right? Like I think overall it grew by double digits,
I think across the board,
Across the board. And it's, even surprised me. And it just goes to show the strength and the resilience of the Australian property market and why we should be invested in it. As if you're an Australian resident or citizen and you're earning good money here, that's where you should be parking your wealth.
Yeah, I think, and what it's shown last year particularly, I think, a lot of people, especially even in the property industry, they think interest rates really dictate the performance of the market, when there's way more variables than just interest rates that'll dictate what happens with the market. So I think moving forward, again this year, it's going to be again a mix of different things which are looking quite positive. Yeah.
Well, they really scared us, Sam, because they said that when I say they, the media, right, really focused on the negatives. So, for example, all of these foreclosures are going to happen. People can't afford their mortgage cliff. They're going to. Everyone's going to put their homes on the market, which is going to add to so much supply, and then no one's going to want to buy homes, right? Because they can't afford it. But what we've got to understand is, and we said it on a previous podcast, is that the Australian property market's worth around $10 trillion. That's for residential, and the loan amount on that is about 2.2 trillion. So our loan to value ratio is about 20%.
Nothing.
So it's in a really healthy spot equity-wise for people to go, hey, I'm going to sell up because I just can't afford this mortgage. Now, does that mean it's never going to happen? No, like people are going to struggle and they're going to put their homes on the market. But then those other people with good deposits and equity and good incomes are going to snap up those properties in place of that. And it happens throughout every market cycle. It shakes out the weak hands. It shakes out the people who shouldn't have owned property in the first place. And then, unfortunately, it creates a bigger divide between the rich and the poor. But every cycle, this is what happens, and not just in the property market, but we're talking crypto, we're talking shares. Like it weeds out the people who shouldn't be owning those things, and the people that have the cash and the reserves to be able to snap them up, they take it on board, right? And now we've got so many different factors coming into play, like there's no supply, immigration, which we're going to go into, further detail. It's really held up this market. And if you got to think about it, if rates are going up and the property market is increasing in value, what's going to happen when rates come down?
Yeah.
You know what I mean?
When people have more servicing, they can buy, more confidence. Yeah, it's going to be crazy. Another thing about just quickly on Australia before we go into detail, Australia really is made up of resources and the real estate market. That is the Australian economy, really, the massive components of it.
Well, it provides so many jobs, right? Like just through that industry.
Just those two areas alone. And I think we sometimes might think of governments and those higher planners, they don't know what they're doing, but I think they know what they're doing. Like, I think they can pretty much do some of these, they essentially control. And you could say that the market could have tanked hard, but I think they pulled levers so it didn't, because it is such a big pillar of the Australian economy, they're not going to let it go down. Like they can pull levers for it to not go down. Interest rates is one thing. There's many other things they can do. So, yeah, it's just interesting. Like, because I used to be one of those doomsday type thinkers. That's why I didn't act until I was quite, well, late 20s, early 30s. So I was always
Believed in the hype.
I was like, shit's gonna go down. Like,
Yeah.
I'm buying gold, I'm silver, I'm hoarding all this stuff. But the longer you go through economic cycles, you see that they have levers.
Yeah.
And because the Australian
Interests.
and
as
interest,
well.
exactly.
Yeah.
Like a lot of people feed off to the real estate market, not just investors like us. There's massive corporations. The banks are like, they control Australia, really. Every dollar that's pumped into the economy comes from them at interest.
Yeah.
So they have a vested interest for all this thing to keep moving forward.
And the media, I think their job is to sell newspapers and to get advertising so they get more eyeballs on them, right?
That's a vested interest. So.
I don't. You'll never hear the media going, "Look, the property market's just, going neutrally well. It's growing by 5%.
Status quo, easy going.
Yeah. It's a great time to be an investor.
Who's going to read that shit?
Yeah, like it's boring, right? Like it's boring because for us guys, we actually prefer a very stable market that grows incrementally by 5-6% a year. Like that, we're happy with that, right? Yeah. But it doesn't sell newspapers. What sells newspapers is that prices are going through the roof, and the negativity to that is that first-time buyers can't ever afford a home, right? So even if you don't eat avocado on toast, you're never going to afford a deposit, right? So that's going to be a big thing. When the property market's in, say, a bit of a decline, could be 2-3%, all of a sudden it's going to crash by 40%. Why would you be invested in real estate? All these investors are going to get wiped out, blah, 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 right? The thing is that all attracts a lot of attention. Negativity sort of sells newspapers, and at the end of the day, these guys they're not even economists, right? But even the economists get it wrong. But if you understand the fundamentals, which we're going to go through today, of what's happening in the country and what's happening to this market and this commodity that we have that we truly believe in, is, I guess, it's better than gold, right? You're always going to win, right? Especially with our strategy of being buy and hold. It's not even buy and hold for 10, 15, 20 years. It's buy and hold forever.
Never sell. No.
You just never ever want to sell. Like, why do you want to sell for? You know what I mean? Like, pass it down to your kids, and people will say, okay, but how do you enjoy it? Borrow against them. You know what I mean? Like, build a portfolio that's so strong that you've created a bank for yourself that you can always turn to. Let's jump in to what's happening in 2024 and beyond. First one's migration.
Yeah, I think this was a major component of why the market was so resilient. You see all the commentary in the news. The government has let in a lot. Like, the net migration was up 500,000 in 1 year. That equates to about a 2% increase in the population. So huge numbers.
Which I think is a good thing, Sam.
Yeah.
Like, a lot of people are complaining about it, but I actually think it's a good thing because no one wants to work. Like, it's really hard to get people to work. So we need people.
We had staff shortages during COVID when no one was coming here. There was staff shortages.
We're becoming very unproductive as a nation, and it's very, very hard to get labour now, and that's what's stopping us from growing as a country. So we need these people that are a little bit more hungry, that are willing to, get on their hands and knees to just make shit happen.
Get the job done. And so my take on migration and immigration, the government's done it previously. So Snowy Hydro, I can't remember when, it was in the 70s or something. But they had a massive inflow of migration then to help economically build this hydro station. But those migrants come and stay, and they add to the economy. They build businesses. They employ people. There are more people, so the market itself expands. That means we've got 500,000 more consumers or customers potentially buying and stuff. So it does, drizzle back into the economy. But a good point I always remember from my economic days, maybe it's changed based on economic theory and stuff, but when you add another person to the economy, it adds a bit more demand for jobs. So there's competition, so wages can maybe slow in their growth, but it also adds more demand for housing or assets because there's another person in that wants to live and wants to buy stuff, so demand increases. Essentially inflation or asset inflation. So if we think from that context, what is going to happen to all these people coming in? It's going to mean there's going to be downward pressure on potentially wages, or it's going to slow.
Across certain industries.
Yeah, let's just say generally it's going to put downward pressure. But also there's going to be more demand for housing, which is only going to put upward pressure. Yeah. So that whole gap that people complain about, wages and asset price, this type of policy is going to exacerbate that. So if you can see that's writing on the wall.
We're seeing it now, Sam. Yeah. So for example, in Melbourne, which is probably the number one migrant capital of Australia, purely because of the opportunity there to hold that many people, and also its affordability as well. We're seeing rents go through the roof there because all these migrants are needing somewhere to live, and I guess that's probably a really good area where it's probably starting to get easier to get people to work because there's more people, there's more competition now. So for all these businesses that are needing extra hands, it's sort of coming to fruition now. But it's affecting the rentals. Like we've got stuff that was renting for say $450 a week 12 months ago. Now their rental increases are $575.
Wow!
It's going through the roof, and we've been told that that's not going to stop anytime soon because there's no stock that's getting produced.
And who's telling you this? This is good information. Who tells you this? How do you know this?
Well, this is on the ground. Yeah. So this is property managers.
It's not the media.
Yeah, this is property managers. So my property managers. I've got a property manager who manages all of my stuff in Melbourne, all of my client stuff in Melbourne. So she's on the ground. She sees the applications coming through. She sees where they're coming from. She sees how much money they have and what they're willing to pay. These are from my developer friends who produce the stock, and they say, Zah, it's so hard to actually produce the stock now, but we sort of need these rents to get pushed up to increase the value of these end products. So it motivates us to produce this stock at a profitable price, and that's just the cycle. That's what's going to happen, and it's happening in Melbourne at the moment.
It's the normal market.
So I guess we were always projected to hit a certain number of population by the next 30, 40 years. Australia was always wanting to pump up population, and I think there was a handbrake on it during COVID, and now they're sort of playing catch up. But at the same time, it's beneficial for the country because of, it's more taxpayers.
Bigger Australia. It does actually help the country grow.
Yeah, and look, I think the media, and we always talk about the media because that's what everybody sort of takes in. They focus on poor us. Right, they always focus on poor us, but they don't. Yeah, they focus on the victims, and they try and get everyone to think with the victim mentality. But they're not sort of thinking, okay, well, if I was a government organisation, what would I be doing? I wouldn't give a fuck about the victims, to be honest with you. I'd be just going, okay, how do I make this country grow? How do I make it more profitable, so we can do more shit? And some people are going to get left behind. Hopefully we grow enough so we can help those people that get left behind, but we've got to really think of how do we increase income, increase revenue, and be a country where everybody wants to come to. Because if we stop growing, then we're not really a valuable asset to the rest of the world.
And we're a capitalist nation, so you have the freedom to do, you have opportunity.
Yeah.
So the government's sort of saying do whatever you want, like grow if you want.
Yeah.
So you sort of, it's sort of upon you to take the reins and do that. You have the opportunity to. So don't think we're a communist country where you can't and you have to get a pay slip from the government every week. You don't. You have an opportunity to do something.
Yeah, and I think, look, we could easily have this podcast about bashing the government and how shit they're doing, because it's a common, I guess, dinner table discussion, and a lot of people will, who listen to this podcast, they'll pull me up in social settings and they'll go, oh, but what about this? What about that? And I go, yeah, I agree with you. Like, they're not doing a great job here. They're not doing a great job there. But overall, we understand why they're doing it. And once you understand it, play it to your advantage, right? Like, sitting back and whinging about it's not really going to
It's not going to change government policy.
No, like,
they have a bigger fish to fry.
All right, let's sit here and do a podcast on why we think immigration shit, right? But really, at the end of the day, like, it's not going to change anything, right? They're going to do what they're going to do. So it doesn't matter who you vote for. So, like, we've just got to play their game and go, okay, how do we profit from it? How do we gain from this opportunity? Is it right or wrong? I don't know, right? But look, we're just here to make fucking money. So, you know, like, let's not get caught up in the detail of who's doing right or wrong. This is the country we live in. If you don't like it, fuck off, go somewhere else.
It's the game. You just got to learn to play the game.
Yeah, exactly.
One thing I saw, there was a parliamentary report, just to finish off on migration. They're predicting, or this report showing 38 million people in Australia by 2050.
Wow.
38 million. So that's a 40% increase compared to now over the next 25 years. That equates to about 1.6% increase each year moving forward. So if we went up 2% at $500,000, 1.6 is going to be about 400,000. So to get to that 38 million, if that's their target, it's going to continue increasing. It's pretty much that net level of 400,000 moving forward. So there's no, if they want to achieve that target, there's no slowing down from this migration issue. So it's not going to change.
No, it's only going to
get worse.
And it's only or
better. Maybe,
let's bring it. Let's better for us investors, right? So
investors.
let's think about property. Let's bring it back to property. Yeah. So most of these people that come here, we've got to understand that they're not going to buy property straight away unless they've come from wealthy families, and it's. I think they have to be a resident for 12 months or something like that. Something like that.
I think you can buy, depending how much money you bring, you can.
Yeah, there's some sort of prerequisite, but the majority of them, when they come here, they're going to rent.
They want to suss out the areas.
And our rents, we've got to understand our rents, and a lot of renters, I find that, you know, they're stuck in renting and they're struggling to find a way out. But what they've got to understand is renters, and I'm one of them. I still rent, right? Too, yeah. We've had it good for the last 10 years. Like, really, rents have been actually quite low for the last 10 years. While property prices have gone through the roof, rents have actually been quite stable up until probably about 12 months ago. So we haven't had a major rental boom in a very long time. And it's about time it happened, because those rents need to catch up to the capital growth of all of these properties. So it's how the market works, and it doesn't happen in a linear fashion, right? Just like capital growth doesn't happen in a linear fashion. So rental growth now is going through a boom, and it will do so for the next 2 or 3 years probably, right? Because it's been long overdue. So as much as renters, let's call them the victims, right, are complaining about rents going up, but you weren't complaining back in COVID times when rents sort of went down a little bit.
Well, you got a discount.
You got a discount, right?
Cheaper rents then, yeah.
I'm not happy that my rent has gone up by $500 a week, and it's probably going to go up again by $500 a week in the next 6 months when I've got to go to renew. I'm not happy about that, but it does help to support these assets when we're in a higher interest rate environment. And also, we're paying a premium for these assets now. Like, construction prices have gone up by 25-30%. These rents need to catch up to support these assets. It's just life, right? So if you can't afford the rent, like, downgrade to a cheaper rental. If you can't afford that, then you got to move out, right? Like, it's just what it, or you got to make more money, Sam. That's just life, right? So what's going to happen? Getting back to the migrants, they're coming here. They're not buying property straight away. These 400,000 to 500,000 people that are coming here need a place to rent. So a lot of these capitals now are surging in rent prices because they're coming to the capitals first. So we're seeing a bit of a softening effect in the regionals at the moment, because these migrants don't go to the regionals first; they come afterwards. So I think the benefit to us property investors. So let's get away from the victims. Let's now go to the victors, which are the property investors. These rents are going to start supporting these extra costs that, such as interest rates, maybe new land tax reforms, taxes, all that sort of stuff. They're getting passed on because, and also these new prices that we have to pay for property now. You can no longer get a property for 500 grand and expect it to be a great asset. You have to spend a little bit more. So it's positive for us property investors, and we need that rental income there to support the asset, so we can hold the asset for forever, like we were just talking about. So, migration is not stopping. We are welcoming it as property investors, and it's only going to do good things to our assets moving forward.
It's not changing anytime soon.
No.
It's going to continue.
Yeah.
Yeah.
Okay, number 2, supply. So we touched on this with in the previous topic. It's about what this target is in terms of what we now need. So there were targets with migrants come in, but now the Albanese government has come out saying there's a target of 240,000 homes per year for the next 5 years, which equals 1.2 million homes.
That's the goal.
That's the goal, right? I don't know how the fuck he's going to do it.
Well, he can't.
He has no plan. The government are terrible at sort of building and creating homes.
The states have taken all the labour. So the states doing their projects, like this guy might want at a federal level to increase supply. But if all the states are building shit, how are they going to build houses?
It's all well and good for the government to say, okay, we want this, but how are you going to do it? And this is the reason why there are attractive tax breaks for private investors to produce housing, because the government doesn't want to do it. So what they do is they go, okay, we'll reward property investors to produce it. And this is why they brought in these new depreciation laws where you can depreciate pretty much the most on brand new property, because they want to encourage new construction.
It's a win-win. Like the taxpayer will get a break, but you expand in the economy.
Exactly. But even with the help of us private investors creating this product, we still won't hit that target. So what does that mean, Sam, to, I guess, the demand? The supply and demand, I mean, there's always going to be more demand from not just these migrants, but from the local market as well, especially in great areas. But there's not enough supply.
Reminds me of a book. Remember that book you gave me? It was The Accountant for Someone. He was a tax guy. It was someone's right-hand man. It's a tax book.
Tom Wheelwright.
And he wrote about how one of the books you gave me I read was you follow what the government sort of gives you a credit for. He's saying you look at what the government's doing and just play in the space where they give you credits, which is like the property investment space. I guess you have to look at it from the government's point of view with this thing. For them to build stuff, like it's a lot of private people doing the rental market properties. For the government to do it, it costs too much money. So how they justify it is they'll give, say, Sam, $5,000 refund for building and creating a property worth, say, $700,000. The government didn't have to. That only cost me is a $5,000 refund to supply that to the Australian
and Sam,
scenario.
It's funny you bring this up, because I just read an article the other day of people complaining about negative gearing and saying they should remove it and all of that sort of thing. And it's like, negative gearing, like, for our listeners, is meaning it means you're losing money.
Lost money, yeah.
So you're putting money into something like a business, and you're losing money on a monthly basis or a yearly basis, and the government doesn't refund you that full amount of loss.
Correct.
It's just you're claiming that loss as a deduction,
As a tax
right?
deduction, yeah.
So you're getting part of it back,
Yeah.
dependent on what tax bracket you're in. So a lot of these people, I guess they're uneducated and they just see it as a gift from the government and all of that sort of thing, and it's just making everyone wealthier. Well, the thing is, these people that are investing their hard-earned after-tax dollars into something that they're not even living in, they should at least be able to get a deduction for it. It's not like that full loss. So let's say you lose $100,000 a year in negative gearing, right? It's not like the government's going, okay, I'm going to write you a check for $100,000.
They're not reimbursing you dollar for
you're
dollar.
still at a loss, right? So not only are these people sacrificing their after-tax income, putting it into a deposit for a property that they don't even live in, right? Providing housing for the community, and yes, they're doing it for a profit on the back end, but so they should. They should get the deduction, they should get the profit, right? Because that's the whole point of sacrificing your money. Now, instead of them using that money to go and buy a fucking new truck or whatever it is, or going on a holiday, they've actually contributed to society to provide housing. So these people that are complaining about it, yeah, it's making them richer because they're getting the capital growth and they're getting the deductions, which is reducing their tax. But let's say we took it away. Like, then it doesn't become attractive for his private investors.
There'll be no investors.
To produce this stock. What's going to happen? Rent's going to go up even more.
Which
right?
is what you see overseas, really.
It's happening. It happens. And we've got to understand that these people that, and I am one of those people, right? Where, and you know, I don't give a fuck about the tax deductions, to be honest with you. I don't even do it for that, right? I will still cop that loss, not even put a deduction.
About the refund.
Yeah, I don't even care about the refund. I'm still losing, right? But I do it because I know I've got that profit on the back end. Now, I could easily take that money now and just buy my own home. Or I could easily take that money now and ship my money off overseas and not even have to deal with this, right? But the thing is, it's not doing anything for the supply issue. It's not doing anything for housing. And I think people need to get out of their heads that landlords are just greedy motherfuckers trying to make money. Like, yeah, we want to make money, but without us, you guys would be fucked.
And think we are renters ourselves, so we understand. Like, I'm paying rent. So I'm another pawn in the game, but I can see the other side of the game, and I'm like, well, I have to do that as well. I can rent, pay someone else's mortgage, that's okay, as long as I'm doing something else on the other side.
And if we take it away, then we'll get back on point here. It's going to impact supply, right? You take all of these, I guess, the tax code for property investors away, and this is why they'd be mad to meddle with it, right? Yeah. Because it's happening in Melbourne. So they've taken away the land tax free threshold. They haven't taken it away. They've reduced it from 250
They're
to
stinging everyone.
50 grand or something like that. Like I had a call the other day from a builder friend of mine who's building his own home in Melbourne, and he doesn't live in that home. He's just, obviously it's just a blank site, and he got hit with a $9,000 tax bill, land tax bill, because he's not living in the property.
This hasn't been built.
And it's like, man, you're driving people away, right? Like that's not going to last long. Like people are just going to have enough and just go, leave. Fuck, we're going to go. And it's going to impact supply even more. So all of these people that whinge about the tax code that work in landlords' favors, it's only going to make matters worse because there's going to be even less supply. Rents are going to go through the roof even more because there's obviously no supply, so the demand will go up, especially with all of this population coming in. And look, at the end of the day, the investors will always win. They will always win because the demand is there. That's what it comes back to. It's the demand. So whatever you try and meddle with, it's always going to go back to rents. Because they'll get passed on to the renter, because at the end of the day, they're the customer, and they've got to pay for the cost of doing business, right? We're not here to do it just to create a charity for people to live in homes, because if we wanted to do that, I'll just build orphan homes overseas, right? We're doing it as a business, right? So you don't go down to my hair salon, for example, and get free hair.
Or cost.
Right?
Cost. So
you pay a fucking premium because we're providing a service, and so you should pay a premium. Yeah, we profit off you, right? But we provide that value for you, just like housing, right? And renters have so much power in this country. Like if something breaks and I'm a landlord, it's my responsibility. So like these are the things that they've got to remember. Yeah, you're paying a premium for it, but that's market. That's what you've got to live with. So supply is really getting soaked up by this migration. Dwelling approvals are down. They were already down prior to COVID. And a lot of developers are going bust because they can't make it profitable.
And that's sort of yet to filter back in because they're happening now. So those projects they might have had lined up, they're going to disappear.
And we're on the ground, so we do this full time. And I guess I'm the property influencer, right? So everybody in the game tries to get me to recommend their products. So I will compare it, say 2 to 3 years ago. I would have so many options to I guess show my investors to go, hey, these are the things that you can get into for 500 grand. These are the things you can get into for 600 grand, and so on and so on and so on. Now it's like it's so limited because there's just nothing out there, and developers aren't launching projects because they don't see them stacking up. They're not going to do it for free, right? So there's no margin. So there's no supply there, and also you got to ask, okay, well, but what are they going to do with these sites? Well, they'll just sit on them. Because a lot of these sites, what people have got to understand, they're not owned with mortgages.
Yep.
They're either owned by wealthy families or big funds that don't need a return. And why would they sell the sites at a loss? You know, they're not bleeding any cash out of it. So they'll just sit on the site and just wait for the market to turn so that then that's where their margin is.
They can make money, yeah.
So if we understand, you know, how the supply originates, and it originates from profitability from producing the product, then we'll understand, okay, well, you know, we get it. There's no supply, and what's going to happen to prices? There's going to be a shortage of stock, and it's going to increase in demand, and that's going to push up prices. And then once we get that, say, 15% price growth, which we're sort of nearing that point now, developers will then go, okay, well, there's a margin in it. We're going to start producing this stock because we know there's a profit. We can now get funding from banks for the construction, and then we'll start rolling out more stock. But it's not happening anytime soon.
And I was going to say, like, for that to occur, once that price rise has to occur first, then they have to start building. So that's years away, right? That sort of tempering of this supply issue, bringing back down, that's not going to be rectified anytime soon.
Let's get past this supply because we've got to keep moving. Interest rates and inflation. I mean, we've talked about interest rates a lot, but let's just talk about the outlook really, really quickly.
Yep.
The interest rate is looking like it's at its peak. I think, you know, we may have maybe one more. I don't really want to predict all this shit because there's so many guys in this industry go, I'll predict this, I've told you, but I don't give a fuck. You know, look, at the end of the day, we might get another increase, we might not, but I think we're pretty much near the top. Over the next 6 to 12 months, we're probably looking at rate cuts. I don't think it's going to come back to 2%, 3%, but, you know, it might have a 5 in front of it. And then what do you think is going to happen to prices then when they start coming back?
Go up.
Which is going to move into our fourth topic, which is sentiment. It's more so the sentiment. So it's not so much the interest rate coming down. It's just telling people, hey, money's going to be slightly cheaper. And then all of a sudden we've got this herd mentality and there's so much more positivity in the media. And it's already starting because people are starting to go, oh, rates are going to come down at the end of the year or start of next year. Now's the window to buy, which is, they're not wrong. And that's what we're trying to tell people as well. And we've even seen it in the inquiry. Like, you know, it doesn't help that we don't have the supply, but like we've seen it, the positivity in kicking off 2024. The inquiry has been a lot more, we've just been busier.
Positive, yeah.
Because people are just going, hey, like, I think the end is near. And they're wanting to get in before, you know, prices shoot up again.
Even if they don't, say, drop, I think the fact that they're not going up and just plateau even for this year and don't drop, because that's a stable environment, we can make decisions. If you've done it before, you can make a decision when things are a bit, how you going, like a bit chaotic, because you have experience. But all these, so we see it a lot with the first home buyers or the first investors. They really need a lot more things going to plan for them to make a decision like that, being their first one. So I think even if they don't drop at all, that sort of constant rate where they can predict it, plan for it, be comfortable with it, they're going to be a lot more, you know, wanting to jump in.
They can plan for it, right? I think the issue was about 12 months ago
when their pants.
They're going, oh, where are rates going to end up? But they're going to end up at 12%, 13%. I'm not going to be able to afford anything. So it's easier to sit out. I get it, right? Now we're at a point where it's sort of, well, it can't really get much worse than it is now. Let's just predict that it just stays at this level for the next fucking 12 months, whatever it is. Let's just deal with it. And, you know, what's the price if we stay out of the market, and what's the price of, you know, getting in? And they can weigh up that benefit. And, you know, it's not for everyone, but for the people that can sort of endure that pain for the next 12 to 18 months, then jump in.
I was just going to finish
go
one more thing, just with that one. I think it'll be interesting this year as well. This is the first year they're doing that 2-month gap between interest rate changes. So it's going to be less like volatile because they have more data. Do you know what I mean? Like before, every month people shitting their pants. What's going to happen? Yeah. So it's being dragged out a bit longer. I think it'll be a bit more stable. What's going to happen.
I actually hope they increase it one more time, just to get it over and done with.
Yeah.
You know
So just to kill it at the top.
And look, it sounds bad because a lot of people will be really hurt by it, but just get it done. Rip off the Band-Aid, get it done, and then the sooner they can do that, the sooner they can see more pain, the sooner they're going to drop them, and there's going to be positivity, and it also lengthens the window for us investors to try and get in, because that's what we're trying to teach our
It extends
investors.
that sort of
Yes.
buying period.
There's more of an opportunity. There's a longer, because look, it's all steering towards it booming again. You know what I mean? It's just going to happen. Number 5 is style and design taking a back seat in affordable cities. So, what we had this conversation the other day about Gold Coast and more so Southeast Queensland being a cheaper market traditionally. We used to see like so much, well-designed stuff, award-winning stuff, like to the point we'd go up there, visit these properties, and go, why the fuck don't we have them in Sydney? And a really good point that we made was that they sort of needed to do it to attract people to the state, right? And now, like, it's a constant influx of people going there, not just from the local market, but there's migrants that are sort of moving there now. And it's a very, very popular region to reside in now. It's become a world city, Sam. So in terms of Brisbane. So now what we're finding is the design and the really out there sort of types of properties that were once marketed and built sort of have taken a back seat now, because they sort of don't need to do that anymore to attract people there. So it's especially with construction prices now, it's too expensive to go too out there with it, which is good news for those people that got into those products. You got into some of those award-winning design products, so did I. But we're just not seeing as much of it anymore, because it's all about affordability now. It's all about, okay, how can we afford to just provide this accommodation at a profitable rate so that we can rent it. There's still demand for it. We're still producing really good stock, but we're just not using those world-renowned architects anymore. And there's still, those people are still in jobs, obviously, because they're building a lot of the luxury stuff that owner-occupiers are paying millions of dollars for. But as property investors now, we're sort of more stuck towards that affordable stuff that is still good quality, but that design is not really there anymore, and we're seeing that trend.
The X factor, yeah. So that golden era in Southeast Queensland is sort of gone, where you got those luxury type properties you could invest in. Yeah. So there's still like a lot of luxury developers doing really beautiful things up there, but you're looking at $2, $3, $4 million plus, right? And so the investors aren't buying that unless you're super cashed up. Our investors are buying from 750 to say, $1 million, maybe 1.1. That type of product there is usually a volume built by a volume builder. It's a project home. If it's a townhouse or an apartment, it's really just got the basic amenities in it. We're not going too hard with anything that's been designed too well, because then the construction price blows out, and then obviously the price of the product is too much for our investors. So we've really just got to focus on probably more so location and build quality now. So that's a really good trend to keep note of. Number 6, government policy. So no, there doesn't seem to be any changes coming.
So we touched on this
in terms of negative gearing and CGT discounts and stuff. The investor type tax benefits. I think one thing.
Well, Queensland just came out with first home buyers concession. Yeah, so they, I think it's up to 750,000.
So they're still around there.
Yeah, so you've got. I think it's like 30 grand or something like that, which is only going to push up the prices even more. But that goes to show that the government policy is really to fuel the market.
It's still,
and so, to push it up.
All this is saying is their policy, the government's policy. It's very clear. They're pushing the market forward. They don't want it to go backward. And now the most recent change, I think, is the tax changes. So income tax. So that's going to give you not a lot more money, but more dollars in your pocket. That's probably going to be spent on things. People don't save too much. They might save, but it's going to go towards things. It's going to maybe allow you to borrow more if you're in the market for a property. So that's going to fuel some more demand in the investment property space, or the housing market at least. You might get a better rental. You might drive up rental prices because you can go to another rental level, or you might be able to borrow more money.
Or people can upgrade.
You can upgrade. So there's going to be more money going into the market, i.e. the Australian market itself, instead of to the tax coffers.
Which is going to push inflation up as well.
Exactly. So that's a cycle. It's a cycle.
Number 7, high rents. So we've pretty much gone into detail.
All those things we
that.
talk about
Yeah.
create the high rents. Really.
And which means that the yields are going to catch up
Yep.
to these property prices, which is going to make it more attractive to investors to hold these products.
Yep.
Which is going to ultimately push prices up even more because investors chase yield, right? So we need these yields to catch up to the cost of building these properties now.
Yep.
We're in that in-between stage at the moment where we're waiting for these rents to increase. So it is harder to hold these assets, but those investors that are sort of, I guess, negative gearing and putting money in every month to fund their investments to get through this in-between stage will be rewarded once things balance out and property prices will increase again.
Would you say, just quickly on that, would you say that investors have sort of taken a back step the last year or two, and now this year they're going to start?
Yeah, so
they're gonna pile back in?
it's the herd mentality,
Yeah,
right? Like the very few investors that are sort of funding their way through this tough time, which I think is the way to go. Like you don't have to be buying property every single year if you don't have to. Sometimes you'll go through 2 or 3 years of just funding the properties that you have to go through that in-between stage.
Yep.
So those people will be rewarded because they're in the market.
Yep.
But it's the herd mentality when those yields catch up and it becomes more attractive to hold those assets that investors will start piling in. And what happens then is more demand, which is just going to push up prices of everything else. So it's just how the market operates, right?
So that's going to come this year, I think.
It'll come, I think,
towards the
second
end.
half of this year.
Yep.
Construction costs, which we've touched on, have gone up by 25-30%. These don't look like it's coming back.
Yep.
They have stabilised, so they're not sort of increasing at such a rapid rate anymore, which is good news for us because we can predict how much things are going to cost us as developers. The same way we can predict interest rates.
Yep.
So, for example, when we're doing a development, let's say we're holding a site for, say, 18 months, we need to predict, 7% interest.
Yep.
It's the same with construction prices. If we know it's stabilising, we need to predict this is how much our feasibility is going to be. And this makes it a lot easier for us to sort of see what our end value will be. And I think it's a little bit more... A lot of developers and builders, they got burnt throughout COVID because they were attached to these fixed price contracts, and they ended up upside down. So these poor guys were already operating on razor thin margins, and you know what? Like nobody likes working for free.
No.
We all need to make something. So now it's a bit more predictable in terms of the cost of money and the cost of materials. The only thing is we've got this labour shortage at the moment, which is making it tough. But yeah, construction prices are here to stay. So we know that we're 25-30% more. So replacement values are really going to drive up the cost of even established properties.
Existing stuff, yeah.
Because you can't produce it,
Yeah,
right?
yeah,
and
yeah.
land prices never come back either.
Yeah.
Reinvesting.
Yeah.
So this was we want to talk about the cheapest houses in Sydney are now unaffordable for first-time buyers. So this was an article that was written in Australian Financial Review only a couple of days ago, which shows us that now we're in this stage of the cycle in Sydney where people who are living here cannot afford, they have to just understand that they cannot afford to buy in this market. And this is for the general population. And what is their alternative, Sam?
Reinvest, essentially.
Yeah.
Or you can rent and never invest, which we would highly not recommend.
Yeah, we always want you to invest,
You
right?
have to do something with your capital. Like if you're living paycheck to paycheck and you can't save money, that's another story. But if you're saving money, renting and not doing anything with that saved money, then you're going backward.
And there's going to be a big portion of that market that just continue to rent and not invest, right?
Correct, yeah.
Our job is to try and get as many of those people to invest in another market, which is going to give them a better return than just not investing,
Correct.
right?
Yep.
And now we've hit this stage where compared to, say, 10 years ago, where you could still buy in the affordable pockets of Sydney, whether it's a unit or a house on the outskirts, it was still within reach. Now it's just not within reach. So rent vesting needs to be considered by most people that live in this city that don't have the benefit of bank of mum and dad, and they just need to get exposure to real estate. So more and more is there a need for a business like ours to provide that value where we go, okay, Sydney's not our market, but maybe consider Melbourne, maybe consider regional New South Wales, maybe consider, say, Southeast Queensland. It's more affordable. You get the tax breaks, you get the higher rental yield, so it supports the asset. It's a really good alternative to just trying to bust your ass to get something, let's say 60 to 70 Ks out from the CBD in Sydney, which ultimately you don't even really want.
You don't want to live there. Yeah. And you're talking to people who are doing it. I guess that's the beauty of us. We actually do this ourselves, Rentvest. So
yeah, well, we don't buy in
pros.
Sydney.
Yeah.
We don't buy in Sydney because it's just it doesn't stack up for us. So that's going to be a big thing. I think rent vesting is going to be even bigger going into 2024, even to much more of the future. And I guess opportunities in the market for 2024.
What are you seeing? What are you seeing in this year to come?
Look, I think I see that affordability.
Yep.
Because servicing's being crunched by these interest rates. So I think affordability is going to be a really big thing. And when I say affordability, properties that are priced between, say, 650,000 to, say, $1 million, right? That's going to be really where the opportunity is, because that's where these migrants are going to flock to. That's what's going to rent really well. That's what's going to happen when, let's say, the person in a $2 million home can't afford to live in that anymore, and they liquidate that and they move down to something that's worth $1 million.
Yep.
That affordability price bracket is where we're going to get most of the growth, right? That's where the yields are as well. And that's where it's really hard to find that type of stock, because these migrants and even the local market, that's what they're chasing. They're chasing that.
It's most high demand, like space.
It's the most highest demand. And it's, you know what, it's not sexy, it's not glamorous, but it works from a property investment point of view. It grows in value. We know that it will grow in value year on year. Even if it grows by 5%, we're winning, right? And I think the apartment market's going to really take off as well. So in Australia, we've never really adapted to, apartments being great investments. I think their time is about to come, because the gap between the house price, median house prices, and apartment prices is at the biggest, widest gap ever. I see. Right? In history, right? Yep. So it only makes sense with servicing being crunched and rents being pushed up in that apartment space is going to push people to go, hey, instead of paying high rent in these apartments, let's just buy one. And it just comes down to affordability. Like if people want to stay in their suburb, but they don't have $1.3 million to spend, but they can buy an apartment for $750 grand. It makes sense. Our cities have now opened back up again. There's no more COVID. There's no more lockdowns, right? So we don't need to flee to these regional areas and work from home anymore. Businesses are now encouraging people to not work from home anymore, come back to the office. So our cities now are thriving. So the apartment space, very, very exciting. I think the local market are going to take a long time to sort of catch on to that, because as Australians, we feel that, hey, we
still want land.
We want the big block of land, we want the house and all of that sort of thing. But these migrants that come here, especially the skilled ones, they're very used to living in apartments, and they're just going to buy them up, create more demand, and we're not producing any more of it.
Love it. I need to save some more money to invest more.
load up on apartments. Load up on apartments. I think that's where the opportunity is, if you can get one, because they're very few and far between at the moment. Good ones. Yeah. So anyway, we're excited by 2024. Much more excited than 2023. If you guys want some help with building your portfolio, come and see me and Sam. Please reach out. But I look forward to the next podcast. Thanks, Sam. See you guys.
See you.
Bye-bye.